Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups, I will be talking about an underlying asset, and setups that I talk about can be taken with futures if I'm talking about ES or SPX, or shares of stock or options. That's up to you, but my analysis and setups are based on an underlying asset. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. So please feel free to post, and I will do my best to answer your question. My agenda for today, what I want to talk about, first of all, news items, economic data, events, and earnings for this week. And then I'll go through my positional analysis, talk about levels that are in play for today, and then I'll review a few setups from this morning, and then we'll take a look at the live market. So if anyone has any stocks they want me to take a look at when I get to the live market, please let me know and I will do that. All right, so the news items for today. First of all, economic data. There was a data release this morning. Retail sales came in higher than expected. So that's for today. Retail sales higher than expected. Tomorrow, a couple of big events. First of all, the VEX expiration. I believe that's at 9 a.m. tomorrow, 9 a.m. Eastern Time. And then the FOMC minutes are released at 2 p.m. Eastern Time. And then finally, Friday is the August monthly expiration. And as I talked about yesterday, that expiration is not as call dominated as the past two expirations. All right, let me get started with my positional analysis now. So this is part of my planning process. I'm going to start with the S&P 500. And before I take a closer look at this chart, I'm going to take a look at a larger time frame. I'm going to go to SPX. This is the basic S&P 500 index. This is a 30-day 1-hour chart and Thinkorswim. And this is showing the break in price action with the Fitch downgrade. Fitch downgrade of U.S. debt, long-term debt. And really the SPX continues to trend lower, and it looks like maybe trying to find support at the 44.50 level. And if not, the next level down below is the 4400 level. I'll talk about that in just a minute. So levels on the chart. First of all, the lower and upper weekly expected move. That's shown with the dashed purple lines. That's from the options market. And then the dashed blue lines are showing the lower and upper daily expected move. And note that SPX is trading below the lower daily expected move. Let me just zoom in on this so we can see get a closer look at the price for today. Excuse me. All right, so those are the weekly and daily expected moves. Let's take a look at some Spotgamma levels now. These are Spotgamma proprietary gamma flip levels. These should be levels where market makers are anticipated to react. Let me point out the key daily levels. First of all, here's the put wall at 4,400. That's the strike with the largest net negative gamma that can be expected to act as support. And again, if the 4450 level breaks, that looks like it is the next level of support down below. So that's the put wall, the potential floor. And the next level up is the 4485 volatility trigger. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. So for much of the last few months, the S&P 500 has been in a positive gamma environment, and then is now trading mostly in a negative gamma environment, leading to larger swings as market makers are trading with price. They're selling futures as the S&P 500 drops, and they're buying futures back as the S&P 500 increases and implied volatility decreases. And I'll talk more about that in a minute. And the next level up is the 4,500 level. That is the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And then finally, the call wall is at 4,600. So that is the strike with the largest net positive gamma, and that can be expected to act as resistance. So a floor, potential floor at 4,400, potential ceiling at 4,600, and a pivot level around 4,485 to 4,500. So those are the levels in play for SPX. Let's just take a look at one other SPX chart just for today. So this is SPX in a 1-day, 1-minute chart, just showing the levels that are in play for today. So this is showing that SPX is trading below the volatility trigger in a negative gamma environment, and also below the lower daily expected move. And now chopping around the 4450 level. All right, let's take a look at Bookmap. And regarding the shifts in levels for SPX, for today there were none. So no shifts in levels for SPX from yesterday to today. And then on the other hand, I'll talk about SPY in a minute. There were every single level shifted, mostly higher, but lower as well. All right, so this is the ES futures in Bookmap. Let me start with the levels on this chart. So on this chart, I have my own cloud notes, and I have marked SPX levels. So here are my cloud notes in this column right here. I have SPX levels, and that is a 4472 level that was noted as resistance in the Spotgamma AM Founders note. I also have SPY levels. So here's the SPY 444, 445 put wall. Here's the SPX 4460 level. That was noted as support. Also this 4450 level, key level, combo 1. That is that's a significant combo level indicating combination of SPY and SPX gamma. So those are the levels in play. Also ES now trading below the lower daily expected move, as it has been for most of the RTH session. And we'll talk about setups in a few minutes. All right, so again, there were no shifts in levels for SPX, but for SPY, the volatility trigger shifted higher. The put wall shifted higher from 440 to 445. So that 445 put wall not doing its job, price trading below that level. And then the call wall shifted lower from 460 to 455. And the absolute gamma strike shifted higher from 445 to 450. So framing the gamma levels between around 445 for the put wall and 455 for the call wall, with the volatility trigger and absolute gamma strike being at 450. So shifts higher and lower for SPY. All right, so that's the S&P 500. Let's take a look at NASDAQ. And again, I'll talk about setups in a few minutes, how we can use this information along with the hedging flow and order flow shown in Bookmap and Spotgamma Hero. All right, so here's NASDAQ. And I want to take a look at a couple of charts just showing isolating QQQ levels and also NDX levels. So first of all, here's QQQ. Zoom in on this. This is a 1-day, 1-minute chart. And for QQQ, the volatility trigger shifted lower from 375 to 370. That's shown here, the 370 volatility trigger, and that was acted as resistance today. Key level for QQQ, that's also the absolute gamma strike. So that's QQQ, the levels in play. Let's take a look at NDX. And note that the volatility trigger for NDX is at 15,090, and price has been chopping up and down around that level, now below. All right, let's go to Bookmap, go to the NQ futures. Scrunch this down just a little bit so we can see everything. So here's the, again, I have my own cloud notes, and I'm showing QQQ levels. There's the 370 put wall, volatility trigger, and absolute gamma strike. Also, I'm showing NQ levels, the zeros and the 50s, the big round numbers. There's the NDX, 15,175 large gamma 3 level. There's the NDX 15,090 volatility trigger. So those are the levels in play for today, primarily the 370 acting as resistance and making for potential reversal level for a great short this morning that I'll talk about in a few minutes. So again, for QQQ, volatility trigger and call wall shifted lower, and then for NDX, the put wall shifted lower down to 14,700. All right, let's take a look at and see how market makers were positioned on the gamma curve at the beginning of the day. What I want to take a look at is gamma notional for SPX, SPY, NDX, and QQQ. So this will give us a sense, and I'll show a graphical representation of this in just a moment, give us a sense of how market makers may react to changes in price and volatility. So this shows that at the beginning of the day, market makers' position on the gamma curve for SPX, SPY, and QQQ, this is all negative. These numbers became less negative from yesterday compared with yesterday, so not quite as negative gamma positioning as yesterday, but still negative gamma. So in this case, for SPX, SPY, and QQQ, traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. So as price drops, their delta exposure increases, and they have to sell futures. All right, let's take a look at a graphical representation that illustrates what I'm talking about. And I'm going to look at the Vanna model. I'm going to start with SPY today. What this chart is showing is market makers delta notional on the vertical axis and price on the horizontal axis. There are two curves on this chart. The gray curve, oops, wrong tool. Just clean all that up. All right, so the gray curve is showing how market makers delta notional will change with changes in price only. And then the purple curve adds implied volatility to the equation, and that's showing how market makers delta notional will change with changes in price and implied volatility. And that change in implied volatility is the Vanna effect. That's a second order Greek, so hence the name of this chart. All right, so the low of the day for SPY was around 443.5, so definitely on this negative gamma portion of the gamma curve. So what this is showing is as price decreases, market and implied volatility increases, market makers delta notional will increase and they'll have to sell futures. And on the other hand, if price increases and implied volatility drops, market makers can buy back short futures. And that is a put Vanna rally. And that can lead to this, when price is trading on this portion of the Vanna model, that can lead to large moves in either direction, as again, market makers are trading with price. All right, so that is, and one of the keys to this is watch how implied volatility, you can watch VIX for the S&P 500 or VIX-N, VXN for NASDAQ to see how implied volatility is changing as well. I showed that yesterday. All right, so that is the SPY. Let's take a look at QQQ. And both these curves are very typical of a negative gamma environment. And for QQQ, the low of the day so far was right around 366. So on this portion of the Vanna model, firmly in the negative gamma region. As price decreases, market makers have to sell futures. As price increases, they can buy back their short futures. They're also always want to remain delta neutral. All right, so my thesis for the day was just looking for higher volatility. Wider trading range, larger moves based on this gamma notional and Vanna model. All right, let's take a look at some setups now. I'm going to start with the S&P 500. What I'm looking at here is the hero signal. This is from Spotgamma. This chart is showing price for SPX and then the hero signal. This is hedging impact real-time options. This is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all combined into one signal. And this is what you want to look at if you trade any form of the S&P 500, whether it's ES futures, SPY shares, SPY options, or SPX options. This is what you want to take a look at to see how options traders are trading and how market makers are responding. All right, I'm going to zoom in on this chart. I'm going to zoom in on the morning session. So this is the, right here, this is the cash open, RTH open, 9:30 a.m. Eastern Time. And initially there was a divergence as options traders were taking positive delta positions as price was falling, and then around between 9:50 and 9:55, options traders started taking negative delta positions. At the same time, price was moving lower. So not as easy a read today for hero as yesterday in the S&P 500. Let's go take a look at Bookmap now. Go back to ES. And looking at order flow, it was an easier read. Actually, let me I'm going to zoom in a bit, scroll over. So here's the initial reaction to the retail sales that came out at 8:30 a.m. Eastern Time. Initially bearish, then bullish, and then around 9 a.m. aggressive buyers started to come in. You can see by the large green volume dots, those are buy minus sell, market buy orders. And note that larger traders were fading that move with iceberg orders. That's shown by this falling light blue line, as well as these icons here. These are quite large. That is 1,438 contracts. This is 3,603 contracts, 840 contracts. Large traders selling that move. Here's another 830 contracts. So even though options traders were initially taking positive delta positions, larger traders with iceberg orders they used to hide their size were definitely fading this move, selling strength, and then eventually price tests VWAP, that this light blue line, that's VWAP, tests that 3 times and finally moves lower as options, as aggressive sellers, shown by the magenta dots there, start to move price lower. So at this point, cumulative volume delta, shown by the dark blue to pink line, rolls over, and then sell stop orders start to fuel the move lower. That's shown by the yellow line in the subchart, as well as these numbers here, the red dots. And then around this time right here is when the negative delta options positions started to come in and help to take price lower down to the 44.50 level. That's SPX 44.50. All right, so that's the short setup this morning. Let's take a look at, go back to Hero now. So there was a long setup. And that's this divergence long right here. Traders start again taking positive delta options positions. And then price reverses higher, finally around 1030, the 1030 reversal. Let's go back and take a look at Bookmap. And you can see around 1030, 1035, the aggressive buyers start to come in again. And there were some iceberg buys. So aggressive buyers come in. Price does a retest of the SPY 444 and SPX 4450 level, and then moves higher up to 4460. And also the SPY put wall before finding resistance there. So a bit of a hero kickoff there as options traders started taking positive delta positions as price was moving lower. All right, so that's the S&P 500. Let's take a look at NASDAQ now. So NASDAQ, let's zoom in here. So an initial reaction, pretty similar to the S&P 500, to the retail sales, initial move lower and then a move higher. And that move higher continued just a few minutes after the cash open at 9:30, and price found resistance at the 370 level, QQQ 370 level. And note that order flow is definitely bearish. Here in this case, the dark blue to pink line is showing cumulative volume delta falling, and the shift from blue to magenta is showing the shift from positive to negative. And then also after an initial burst of iceberg buying shown by the rising light blue line, large traders start selling, and then also the fuel, the low move lower is fueled by sell stop orders as well. All right, so let's go take a look and see what options traders were doing around that time. Let's go to NASDAQ. And just like the S&P 500, this is a combined signal, combined showing NDX and QQQ. I'm not sure why that's not indicated. Oh, I'm looking at NDX, sorry. So there's NASDAQ, there's the combined signal, showing combined signal of NDX and QQQ. Let's zoom in. So I'm trying to show what you would see early in the morning. So this is what Hero looked like in the morning. And note in this case, options traders after about a minute of taking positive delta positions, they start to take negative delta positions. And that divergence sets up a short at that 370 resistance level. So that is a level that you expect to act as resistance. You see this divergence, it becomes apparent. See right around here. So what I do once I see that divergence, I go to Bookmap, and I see these potential reversal levels. At the QQQ 370 level, the NQ 250 level, and also the NDX 175 level. And then I watch order flow for confirmation. Let's just zoom in on this. So as I'm watching options traders start to take negative delta positions, I see price reach this level. Aggressive sellers start to come in. Cumulative volume delta starts to quickly shift lower. You can just see all the pink or magenta volume dots. Those are buy minus sell, and when buy is greater than sell, they're green, and when sell is greater than buy, they are magenta. So a reversal lower at the 370 level. If you didn't get that, there are a couple of tests of VWAP, and then price moves lower, and then another test of 369. That's QQQ 369, and price continues lower. No reason to get long here. With large traders selling with iceberg orders, sell stop orders, as well as aggressive sellers, all moving price lower. All right, so DM asked, please advise your CVD bookmap settings. Okay, we can do that. I don't think I've, so I can just right click and go to the cumulative volume delta settings. So I pretty much have the defaults. Using session range, my session starts at the start of the prior day. So it starts at 6 p.m. Eastern Time yesterday for today's session, and then I do have positive values and negative values shown with these colors here. Right, so there you go. I think pretty much default settings, maybe except the session start and the colors. All right, so nice short setup in NASDAQ. I thought yesterday I thought Hero was an easier read for the S&P 500. And today the Hero was an easier read for NASDAQ. So that's why I watch both every day. All right, let's take a look now. Let me just turn off this. So we'll get back to looking at the entire day. So there was that divergent short setup. Good for almost 150 points from 250 to 100, just a little bit above for NQ. Nice move. Let's go back to Hero. And then options traders, while price was still falling, falling here, they started taking positive delta positions, and that set up along right around the 10:30 a.m. reversal time. So price started moving higher as options traders were taking positive delta positions. Let's go take a look at Bookmap. Here's NQ. Note the aggressive buyers coming in. one big pink volume dot, then aggressive buyers start to come in and move price back up to VWAP and the 200 level. Now it looks like NASDAQ is slowly grinding lower. All right, so those are the setups in the S&P 500 and NASDAQ. Let's take a look at some stocks now. And I'm going to go back to Hero. All right, so let me rank my watch list by Hero signal. Just to make sure that looks right. All right, so I did this yesterday, and I ranked it instead yesterday by strongest to weakest. Today I'm ranking by weakest to strongest. So yesterday in the ranking, NVIDIA was at the top of the list with the strongest signal, and today when I rank NVIDIA this way, or if I ranked it the same as yesterday, it would be on the bottom of the list, but ranking from weakest to strongest, it is at the top of the list. So with the weakest signal, what this is showing, this Hero signal, is showing the strength of the Hero signal compared to the last 30 days and the last 5 days. So the length of the slider, in this case the entire length is colored, is showing comparing the strength of the Hero signal shown by the white dot, comparing that to the last 30 days. And then the colored portion is showing the strength of the Hero signal compared to the last 5 days. So in this case, Hero is probably in about the, I don't know, 15 or 20th percentile for the last 5 and 30 days. So what I'm talking about with a slider here for SPX, for example, this colored portion does not take up the entire length of the slider, and that is that's the 5, comparing this current signal with the last 5 days. So that's a starting point today. So let's take a look at NVIDIA. And FUD expert, you're welcome. Glad you find this helpful. Let me know if you have any questions. All right, so here's NVIDIA. Let's zoom in on this. Going to zoom in on the morning session and note that 450 is the key gamma strike. So that's an important level. All right, and as usual, there's a very strong correlation between options trades, hedging flow, and price action in a stock like NVIDIA. Price action is largely driven, in my opinion, by options trades. So when, just as an example, when traders buy calls like they were yesterday, and I highlighted this yesterday, when traders buy calls, market makers sell calls, and they have to buy stock to hedge their delta exposure. Let's see what they're doing today. And today, in the morning, they were buying puts. That's shown, the calls are shown with the orange line, puts shown with the blue line. So a falling blue line, that's negative delta, and that means that traders are buying puts. And we can also see the total notional value there up to this point in time around 11:05 a.m. And then the orange line is showing calls. So they are buying up to this point in time, 11:05, they were buying puts shown by the negative notional value in the falling blue line, and they were also buying calls shown by the positive notional value here and the rising orange line. But up until about 10:30, the put buyers were definitely in charge. So when traders buy puts, market makers sell the puts, and they have to sell stock, in this case NVIDIA stock, to hedge their delta exposure. Remember, they always want to remain delta neutral. All right, so let's go take a look at Bookmap. Take a look at NVIDIA. All right, zoom out so we see the so we can see the morning session. All right, so sorry about that. So remember, 450 is the key gamma strike. Important level. All right, Truman asked, what does it mean if calls are flat at a high number and puts are flat at a very negative number? I'm not sure the number is significant, but the shape of the line is significant. So if the orange line is rising, say in the morning, this is pretty typical in a rally, the orange line rising, traders are buying calls, market makers selling calls, and they have to buy stock to hedge their delta exposure. And what happens very often is when traders stop buying calls for whatever reason, typically around midday, around lunchtime, they stop buying calls, and that orange line will flatten and price will flatten or drop down slightly. And that's pretty typical of a rally day or a trend day, where price in the morning is heavily driven by call buyers. When call buyers take their foot off the gas, price stops rising. And so again, when the line flattens, that means that traders have stopped that activity, whatever they were doing. So the numbers, we would look at the notional value to compare the numbers. So Truman asked, are they just buying and selling same number of puts and calls, keeping it flat? Again, I look at it as they have stopped whatever they were doing. And if the line reverses, say they were buying calls in the morning, they start taking profits and selling calls, or traders for whatever reason are selling calls, that orange line starts to move down, then they're taking the opposite side, and I would expect price to move lower at that point. So let's take a look at Bookmap, and then we'll go back and take a look at Hero. So let's zoom in. And I may have to turn the absorption and sweeps indicator off, and let me go ahead and do that. That's all these. Let me just adjust it up and see if that helps. So the absorption indicator is showing passive limit orders, absorption, buy and sell. That's shown by the magenta and blue, and then the sweeps indicator, that's what appears to be showing here, is shown with the dark red dots, that's sell sweep, and the bright green dots are buy sweeps. There's just too much here, so I'm going to tone this down. This multiplier I can change so I see less of that. All right, so that helps. So what I'm talking about, these small bright green dots, that's a buy sweep up to that level. And these bright red dots, that's a sell sweep. All right, so remember, NVIDIA was very strong yesterday. I think it was about at 405 at the morning low. Traded all the way up to 452 today, so quite a move in NVIDIA. So call buyers were very active yesterday, and I think they were responding to a Morgan Stanley node an upgrade or something like that. So anyway, strong move higher up to 452 in NVIDIA. And note this buy sweep through the liquidity at the 450 level. And there was some absorption at that level. Let me just make the dots a little bigger. Typically for stocks, the opening closing print are quite large, and you have to change the size of the dots whether you have this opening print shown or not on your chart. All right, so NVIDIA, and then with this final move up to 452 and the liquidity at that level, you can see the aggressive sellers starting to come in, shown by the shift from green dots, green volume dots, to magenta dots, and that's right around 940. Let's go and take a look at Hero now and see what options traders were doing. Zoom in just a bit. All right, so we know that at 940, this is what I'm looking at, 940 right here. So we know that traders really were not doing much with puts. That line was pretty flat. Then right around 940, as price approached that 952 level and aggressive sellers start to come in, traders start selling calls. That's shown by the falling orange line. And then they also start buying puts. So what we know up to this time that I have zoomed now, let me change this just a little bit. Zoom in just a little bit more. So up until about 1040 here, we know that put buyers were definitely in charge. And I can just tell by the strong correlation between the blue line and price action. I can also look at notional value. So that is minus 202 million versus positive 661 million. So put buyers more aggressive than the call buyers. Price moves lower. Again, when traders buy puts, market makers sell the puts, and they have to sell stock to hedge their delta exposure. All right, let's zoom all the way out now for the day. We're still looking at puts and calls. So this call number has not changed a lot for the day. Let's go back to 1030. So 1030, 1045, it's around positive 64 million. Puts minus 200 million. Then we'll zoom out, show the entire day. So a little bit of change in both, but generally this call line is dropping. So they are net. They are buying calls, but since about noon they are selling calls, and they also continue to buy puts. Let's go back to the total signal now, and that should give us a little bit more clear view. So here you can see the strong correlation and setting up a long, really a confirmation long right around 10:30 reversal time, and then setting up a nice divergent short right around noon. Hero starts to drop and price starts to drop about 20 minutes later. All right, so there's the short in the morning, divergence long. Actually, let me clear my zoom here so we're looking at the entire day. All right, so here's the long setup right around 10:35, and then a short. And note, for each move the range gets smaller and smaller. All right, so that's NVIDIA. Let's take a quick look at AMD. Then we'll get to the live market. And AMD was another one that was strong yesterday. And let's just go take a quick look at Hero. Actually, let's take a quick look at Tesla. So Tesla, next one on the list of ranked by Hero Signal. So traders are buying calls and also buying puts. Positive number, notional value 37 million for calls. Negative number. So put buyers are winning. Note the strong correlation between the blue line and price. Put buyers definitely in charge today, helping to drive price lower. Let's go take a look at Bookmap. I'm just going to skip over AMD. We'll go to Tesla. So there's Tesla today, definitely looking for shorts. As traders were buying puts, continue to buy puts all day. And absorption at the 240 level, a lot of aggressive sellers with all these pullbacks. So a move from 240 to 235. Let's go back and take a look at Hero, see if there are any gamma levels in play. So yesterday for Tesla, 240 was the put wall, and that was actually price was trading below that level. That acted as resistance yesterday. So for today, Tesla, the hedge wall, call wall, and put wall all move lower. Let's just zoom in on this. So that is definitely bearish. So pre-market planning for Tesla, definitely bearish. And when you separate out puts and calls, you might not have caught the first move lower. But I think being prepared, knowing the shifts lower and the again the hedge wall, call wall, and put wall prepared you to look for a short. So really no confirmation of this move higher initially with Hero, and traders continue to buy puts as price moves lower. Let's go back to Bookmap. And let me just show you, let's go back. Let me just show you what I'm talking about for Tesla in Equity Hub. There's Tesla. Here is this shows the 10-day history of all these key daily levels. So there's the shift lower from yesterday to today in the hedge wall, and then has gradually been shifting lower. Notice also the key gamma strike has shifted lower over the last 10 days from 260 to 250. And the call wall looks like it has oscillated around 250 to 300, shifts lower yesterday from 300. And also the put wall has shifted lower, and today shifted lower from 240 yesterday to 230 today. So this tells me that traders are looking for and expecting lower prices, lower levels in Tesla. This is how they are positioning themselves in the options market. Again, expectations. That's what I like about options. Options are forward-looking. This is about expectations. Traders are looking for and expecting lower prices based on the shifts lower in all these key daily levels. All right, so there's Tesla. Let's just see if there's a, let's go back one more time, take a look at those gamma levels. So 230 is the put wall. So if Tesla continues lower, 230 is the potential target. Note all the high liquidity at that level. Pretty typical for the zeros and the fives in stock like Tesla and Nvidia. High liquidity that comes in at the cash open at the zeros and the fives. So there's the 230 put wall, potential floor, but also a target for price if Tesla continues to move lower. All right, let's take a look. Let's go back to the S&P 500 and NASDAQ. And I've got just a few more minutes. If anyone has any questions, now would be a good time to ask. Please let me know. All right, so S&P 500. Initial move lower. Divergence long. And then price reverses lower right around noon. And no support today from large traders with iceberg orders. That's a pretty negative number there. Also sell stop orders. You can just see the falling light blue line for iceberg orders and the falling light yellow line for stop orders. No reason to look for long. And cumulative volume delta after price reached the 445 and the 4460 level really leveled off. Let's just see what options traders are doing. Let's go back to Hero, go to the S&P 500. Let me go back to the total signal. Let's go to S&P 500. And overall, the Hero signal is trending lower, maybe flattened off a little bit, but trending lower. This total notion of value of around 100 million is very tiny. That is pretty much a neutral signal. The net notional value can often be in the billions. Up to 5 or 6 billion, positive or negative. So 120 million total notion of value, puts and calls for SPX, SPY, XSP, and ES is again a neutral or flat number at this point of the day. Let's take a look at NASDAQ. So overall notion of value is for NASDAQ slightly negative. Slightly positive, I'm sorry. So still positive, but has been trending lower. Moved up, divergence long, flattened off, and now starting around noon now, definitely trending lower. So starting around noon, options traders started taking negative delta positions in NASDAQ. Let's take a look at Bookmap with NASDAQ, and then we'll wrap it up for the day. So pretty similar picture to the S&P 500. Divergence short, divergence long, and now NASDAQ is grinding lower. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And remember, tomorrow, VIX expiration 9 a.m. and then FOMC minutes are released at 2 p.m. and that will be in the middle of my session. So I will stop whatever I'm doing at that point, and we'll watch the S&P 500 and NASDAQ to see what is happening, see if the FOMC minutes have any impact on price action. So I will see you tomorrow. Thanks again, everyone. Thanks for watching, and I will talk to you tomorrow. Bye.